Hey everybody, welcome to the weekly vlog where our topic is interest rates in focus. First of all, Greg and Bobby are not with us today. They are in client meetings, but they wanted to wish you a happy market week and say if you have any need of them, feel free to reach out to them on social media or just call. Looking forward to a lot of information this week. We're sort of starting in the state of Wyoming with Jackson's Hole. So Trey, take us through sort of the importance of that, what it means.
Yeah, so this is not really a Fed meeting, but it is kind of becoming an unofficial Fed meeting. The Federal Reserve has their annual policy symposium, which is a raucous good time out in Jackson Hole, Wyoming. And this symposium is taking on more of an important role because there's theories out there that the Fed may announce a Fed rate cut unofficially at this meeting or give a good guidelines about their policy. There's been, I don't know if people have been following the markets, but the last few weeks have been very rocky, a lot of fear around trade policies, and the Fed's kind of the safety valve there. If they can cut rates, we may get a rally from the market. We'll see. But so this week, their topics, conversation, their focus, what are they talking about, is really what the markets are watching. And so it'll be interesting to see how important that is, especially considering it's not really a Fed meeting, but it seems like everybody's kind of on pins and needles about it. And the Fed's policy and interest rates have wide-ranging impact on the market. I know, Adam, you brought up some good points this morning about how the interest rates are impacting housing right now.
Yeah, having a huge impact. We saw housing starts fall for the third straight month to 4%. The culprit, multifamily housing. Now, while this looks negative on the surface, looks like a big drag, there is some underlying good news inside of it. Single-family housing went up 1.3%. That makes a majority of that number up. So housing permits actually went up to a 7-month high, the largest gain since 2017 in June. Now, that's a huge number. It went up 8.4% for the month. So while we're looking at the surface, being very, very big drag, if you pull back the curtain, we're seeing consumer confidence starting to drive some of this data. Some of this data like housing and other things that you talked about with the Fed.
Yeah, the individual house purchases, where the single-family homes, that's much more interest rate driven because a lot of people go out and get a mortgage and a loan to buy these multifamily units. They're great because it offers people's homes where they can rent a little lower cost. When interest rates are too high, you see a lot more multifamily housing because individuals can't afford an individual home. So while it looks bad on the surface, where we saw multifamily and single-family total drop, that strength in single family is a good indication that maybe these lower interest rates are helping the individual consumer. That's always so important.
Well, and you're right about that when you think about it. We were talking about this morning. Since the financial crisis in 2008 as a major component of the U.S. economy, housing has been kind of AWOL.
Definitely.
So anything that would get a little bit of traction back on it would really help because it's a multiplier effect. A lot of times you're building, that helps people that are doing closings like accountants or lawyers, a lot of service sector type of employment around that.
Definitely.
So it would really help to get that back.
Yeah, we actually saw a gain in the West, the Midwest, Northeast. The drag was the South.
And that was largely weather related.
Yeah, Tropical Storm Barry had a big impact on that.
So, so that gives the positive impact of U.S. lowering rates, but globally the U.S. rates are considered high, which actually you talked about the impact of having relatively high rates on U.S. multinationals.
Yeah, what's interesting about it is, the guys and I were talking about it this morning, the strength of our dollar is like at a 2-year high. It's up 11% since early 2018. And the reason we mentioned that to you is, and it was sort of with the backdrop of all this international trade going on, part of the drag also, beside China and other places where we're having a little bit of conflict, is the fact when you have a strong U.S. dollar, our exports are more expensive. So if we're, say, selling into Germany with a product made here, mainly a high capital good type product, it really gets more expensive to sell. So if you look at a lot of companies that have a high international sales component, that can really sort of drag on your earnings and margin. So a lot of times if you have companies with more high level of domestic sales, they get insulated to that. But that's another thing on the international trade front that's sort of dragging our earnings a little bit right now, is a strong dollar. But it's sort of a two-edged sword because our dollar is strong because even though the rest of the world is somewhat down, we look great by comparison. It's all cash flow. Our dollar gets stronger as it comes this way. So
So definitely. So lots going to look forward to this week. Not much on the economic news calendar, but that big Jackson Hole event is going to talk about. There's a lot of talk about interest rates, which will impact housing, clearly impact the dollar, and the dollar seems to be impacting earnings. So there's a lot of ripple effects. So for us to watch this week for sure.
Absolutely. So on any or all of these topics, feel free to call the three of us or Greg or Bobby. Reach out to us in any social media platform. We love hearing from you. So many of these vlogs that we do are questions from you, and we really appreciate that, appreciate you forwarding it. So we hope you have a great week, and we'll look forward to hearing from you soon. Thanks.